We are covering these 7 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you. Our review on RGC. Regencell Bioscience Holdings Ltd is a company that's been catching attention with its focus on using traditional Chinese medicine, TCM, to treat neurocognitive disorders like ADHD and autism spectrum disorder, ASD. These are conditions that many people are looking for better treatment options for, so Regencell's approach is definitely interesting. They've developed 3 different liquid-based TCM formulas targeting mild, moderate, and severe ADHD and ASD, which could open up new avenues for patients who might not respond well to conventional treatments. What stands out about Regencell is their use of TCM. It's not something we see a lot of in the mainstream treatment world, especially for conditions like ADHD and ASD. TCM has been used for thousands of years, but bringing it into the modern medical world as a treatment for these specific disorders could be a big deal if it works. For investors, there's a lot of potential here, but also a good amount of risk. Regencell is still in the research phase, so they've got a ways to go before they start seeing major returns. But if they can show that these formulas work, it could be a major breakthrough, especially given the size of the ADHD and ASD markets. It's a space with a lot of room for innovation, and Regencell could be a key player if they can prove their approach is effective. That being said, biopharma investments can be slow-moving. Progress in this field can take time, and there are no guarantees. But if Regencell's treatments gain traction in clinical trials and show real promise, it could drive significant interest from investors and big pharma alike. That's when we'd likely see their stock value climb. In short, if you're watching Regencell, keep an eye on their clinical trial updates and any news about how their formulas are performing. It's a high-risk, high-reward situation, but if they deliver, it could really pay off. So, this is a company to keep on your radar. Our review on NOVA. Sunnova Energy International Incorporated is a major player in the residential solar energy market, partnering with local contractors to install and maintain solar energy systems, energy storage, and a range of other sustainable home solutions. From smart home devices and HVAC systems to electric vehicle chargers, they aim to give homeowners everything they need to run on renewable energy. With a fleet of over 2,892 megawatts of solar generation capacity across the U.S., Sunnova is definitely making its mark in the clean energy space. But things have been a bit turbulent for Sunnova recently, and its stock has been on quite the roller coaster ride. Earlier this week, shares surged by more than 40%, which might seem like a reason to celebrate, but there's a lot going on under the surface. A big part of the reason for this surge is that Oaktree Capital Management, one of the biggest investment firms around, has been buying up Sunnova's debt, about $400 million of it, in fact. This move is sparking speculation that Sunnova is in the middle of some serious financial restructuring talks, possibly even leading to a bankruptcy filing. Sunnova has been facing significant financial challenges, and at the end of 2023, the company was staring down over $8 billion in debt. To make matters more intense, they recently issued a going concern warning, which is essentially an official acknowledgement that they may struggle to stay afloat if things don't turn around. This set the stage for Sunnova's creditors to form a joint advisory group, bringing in heavy hitters like Paul Weiss as legal counsel and Evercore as their financial advisor. Oaktree, now a major debt holder, will likely play a critical role in these discussions. While the company hasn't commented on specific plans yet, it's clear that big decisions are on the horizon. For investors, this creates a pretty uncertain situation. The sudden 40% jump in stock price could be a signal that some are optimistic about Oaktree's involvement, perhaps seeing it as a positive step in the restructuring process. However, there's still a huge amount of risk here. The debt load is massive, and even with Oaktree's investment, there's no guarantee that Sunnova will be able to turn things around without some significant changes. The potential for a bankruptcy filing adds another layer of uncertainty. Right now, it's all about how these negotiations and restructuring efforts play out. Sunnova might come out on the other side of this stronger, especially if Oaktree's involvement leads to a viable solution for managing its debt. But until those talks are finalized, it's a risky proposition for investors. If you're holding stock in Sunnova, it's definitely one to keep a close eye on. The market's reacting with a bit of hope, but things could change quickly depending on how the restructuring unfolds and what kind of deals they strike with creditors. Our review on OM. Outset Medical Incorporated is shaking up the dialysis space with its Tablo hemodialysis system, designed to make dialysis more accessible, convenient, and manageable for both patients and providers. With its all-in-one setup, built-in water purification, and smart connectivity features, Tablo is aimed at modernizing dialysis treatment, whether in hospitals, clinics, or even at home. Now, investors are watching closely as the company just announced a 1-for-15 reverse stock split, set to take effect on March 20th, 2025. If you're not familiar, a reverse stock split consolidates shares, meaning every 15 shares will be combined into one. This move doesn't change the company's overall value, but it does increase the price per share, which can help Outset stay in compliance with Nasdaq's listing requirements if the stock has been trading too low. For investors, reverse splits can be a bit of a mixed bag. On one hand, it might signal confidence from the company that it's working to maintain its position on the market and stabilize its stock. On the other hand, these kinds of moves often happen when a company is struggling with its share price, which can be a red flag. The key thing to watch now is whether Outset can keep building momentum with its technology and push toward profitability. If it can prove strong demand for the Tablo system and show financial improvement, this stock split might just be a stepping stone toward turnaround. But if challenges persist, it could mean more volatility ahead. Our review on AEVA. Aeva Technologies Incorporated is shaking things up in the LiDAR space with its next-generation 4D sensing technology. Unlike traditional LiDAR, which only detects distance, Aeva's sensors also capture real-time velocity data, an innovation that could make autonomous vehicles, industrial robotics, and other smart systems safer and more efficient. By integrating key LiDAR components onto a silicon photonics chip, Aeva is aiming for a more compact, cost-effective solution that can scale across multiple industries. Now, the company just dropped a Q4 earnings report that got investors buzzing. Aeva beat revenue estimates and posted a smaller-than-expected loss, which sent the stock soaring. But the real game changer? Aeva has been selected to participate in the development program of a top 10 global automaker for a next-generation production platform. That's a big deal, as it positions Aeva for potential large-scale deployment in the automotive sector, a major validation of its technology. Looking ahead, Aeva is forecasting between 70% and 100% revenue growth in 2025, driven by new deals in both the auto and industrial markets. That's a bold claim, but analysts are starting to take notice. Oppenheimer just reaffirmed its outperform rating and raised its price target to $6, signaling confidence in the company's trajectory. That said, Aeva still has challenges to overcome. With Q4 revenue at just $2.7 million, it's far from mass adoption, and profitability remains a long-term goal. But if it can successfully transition from development partnerships to large-scale commercial deals, Aeva could be setting itself up for a major growth phase. The stock's recent rally reflects renewed optimism, but the next big test will be whether it can keep up the momentum and deliver on those ambitious growth targets. Our review on NIPG. NIP Group Incorporated is making waves in the esports world, operating under the well-known Ninjas in Pajamas, NIP, brand in Sweden, while also running esports and talent management operations in China. The company isn't just about competitive gaming. It's building a full ecosystem from running top-tier esports teams to producing events and even selling its own branded apparel like jerseys, hoodies, and accessories. Now, the latest moves in the business could have a big impact on its future. With esports continuing to grow globally, especially in markets like China, NIPG Group is in a prime position to capitalize on sponsorships, media rights, and merchandise sales. However, the esports industry has been facing financial challenges, with some organizations struggling to monetize at the level investors once expected. The key question for NIPG Group is whether it can turn its brand power into sustainable profitability. Investors will want to watch how the company expands its presence in China, where esports is massive but also tightly regulated. If NIPG can successfully navigate the market and secure high-value sponsorships, it could carve out a strong position in the industry. But as with any esports company, the path to long-term financial stability remains a work in progress. Our review on ZTEK. Zentek Ltd is a tech-driven company that's all about bringing innovative nanomaterials to market. Its flagship product, ZenGuard, is a patented coating technology designed to enhance filtration efficiency in surgical masks and HVAC systems, something that became especially relevant during the pandemic. But beyond that, Zentek is diving into the world of aptamer technologies and graphene-based materials, looking to push the boundaries of what's possible in industries like healthcare, filtration, and even advanced manufacturing. The big focus for investors right now is how Zentek moves from R&D to full-scale commercialization. The company has already set up industrial-scale production for its ZenGuard coating in Ontario, which is a solid step forward. But the key question is whether it can secure major commercial partnerships to drive revenue growth. Scaling up a new technology takes time, and investors will want to see signs that ZenGuard and other emerging products are gaining traction in the market. Another angle to watch is Zentek's work with graphene, a material that has huge potential across multiple industries, but is still in the early stages of widespread adoption. If the company can successfully commercialize its graphene-based solutions, it could open up new revenue streams. However, like many early-stage tech companies, Zentek will need to balance innovation with financial sustainability. Investors will be keeping an eye on whether its technology can translate into long-term profitability. Our review on CRVO. CervoMed Inc. is taking on some of the toughest challenges in neurology, focusing on age-related brain disorders like dementia with Lewy bodies, DLB, and early Alzheimer's disease. Their lead drug, neflamapimod, is designed to target a key pathway in neurodegeneration by inhibiting p38A in neurons. The goal? To improve synaptic function and potentially slow or even reverse some aspects of disease progression. Given how limited treatment options are for these conditions, any breakthrough here could be a big deal, not just for patients and doctors, but also for investors looking at long-term upside. Right now, the company's Phase 2b REWIN-DLB trial is the big moment of truth. This study is testing neflamapimod in patients with DLB, and if the data comes back strong, it could set the stage for pivotal Phase 3 trials. That's when things start getting serious, with the potential for regulatory approvals and eventual commercialization. But like any clinical stage biotech, the stakes are high. Good data could send the stock soaring, while setbacks could mean more time, more money, and more uncertainty. Adding to the intrigue, early preclinical data hints that neflamapimod might also have potential in stroke recovery, which could open another massive market if future trials confirm its effectiveness. Right now, though, the focus is on DLB. Investors are watching closely for any updates from the trial, and if results are promising, CervoMed could find itself in a much stronger position, both scientifically and financially. With Big Pharma always on the lookout for promising neurology assets, a major success here could put CervoMed in play for partnerships or even acquisition down the line. Please subscribe, give the video a like, and watch more from our playlist. Thanks.